Should we buy or sell the Aave cryptocurrency? So first off, read this disclaimer carefully. Then, of course, do your good deed of the day by liking and subscribing. The Aave slash the US dollar, last time I looked at it was on the 4th of March, 2021. So that is quite some time ago. So let's look at what's happening. By the way, this is their website, Aave Liquidity Protocol, earn interest, borrow assets, and build application. Okay, so you have markets, Ethereum, Avalanche, Optimism, Phantom, so a bunch of stuff, basically. Governed by the community, Aave is a fully decentralized, community-governed protocol with 121,000 token holders. So let's just look at the charts. We start with the big picture weekly data points. So we had a lot of trouble with the red 200-week moving average, and when we failed, we really failed. So yes, the 200-week was a big deal, and it is very much so a big deal. Yeah, so currently we have a messy situation. If we go here to the daily data points, the glass half full perspective is that this could become a bit of a convoluted inverse head and shoulders pattern. That could be, well, that is a way for the bulls to fix the damage. They can fix that damage that recently has been done by going up, basically. The problem for the bulls is that we have another resistance level in play. The green 50-day moving average is now resistance. You also see here that the purple 20-day moving average has become a new resistance level. So we have a messy situation. It's not something that the bulls can't fix, but it's something that they need to really commit to fixing. If we go here to the dailies, yeah, a bit of a, buy signal here on the MACD, not like roaringly bullish, but something. RSI is, and also the PPOs are not like in any kind of territory that is like favorable, especially to the bulls or the bears. Just basically kind of like a bit in a noisy place. And the same goes with the technicals. We have some resistance levels, we have some support levels, we have potentially the inverse head and shoulders pattern. Simultaneously, as we do have an inverse head and shoulders pattern, we have the issue that we are below the 200-week moving average. Yeah, so in this case, I just write 50 daily moving average resistance, but we do have an inverse head and shoulders, so I give the technicals a 1. Just messy territory. Looking to the right here, we do not get much in terms of seasonality data. To the left, we do have a bit. We see that September, the current month, it is 50-50, but on average, there is a 13-ish% loss. October is also pretty weak, and November is atrocious. We don't have much in terms of seasonality data, but the data we do have is simply not bullish. It's bearish, but then again, we don't have that much data. So yeah, it's just a bit messy. I don't think there are fundamentals that are tradable when it comes to cryptos, so let's just go to relative performance. Here are the weekly data points. 74% positive correlation with the S&P 500, 90% with Bitcoin, minus 49% with the dollar index, 32% positive with gold. Short term, 87% with S&P 500, 92% with Bitcoin, minus 70% with the dollar index, and 72% positive with gold. Unsurprisingly, what happens with Bitcoin is going to have the biggest effect on Aave. I don't really even know how to pronounce the name Aave, or is Aave, who knows. Okay, so here is Bitcoin still below that red 200-week moving average, and the problem now is that you see here that the bears, they are not really satisfied yet. You see here that they are trying to break this horizontal support level. This is potentially rather dangerous, very dangerous. If we were to lose these lows here from June, then the downside is substantial. We could even be talking about that 1,200 territory. This is not a level the bulls want to lose. On the daily data points here, to be a bit optimistic, there is the possibility at least of forming a decent double bottom. That's bullish. So that could happen still. That is not lost. But for a double bottom to form, guess what? You need to actually get the line to go up. It's that simple. You need more buyers than sellers. And we did test the double bottom back here in the 28th of August. We got 1 day of rally, but not really much commitment. But it's a possibility. At least there's that. There's some hope. Looking at the dailies, I mean, if we do rally a bit more in the context here of this double bottom, then we could get a buy signal on the MACD. So that would be, multiple indicators pushing some bulls. That would be good. So there is some potential here for Bitcoin to rally. Yeah, here is Aave against Bitcoin. In this case, we do have an interesting setup for the bulls. There is some kind of low being formed here. It's interesting. The problem for the bulls is that we have gotten into an RSI territory that has been shortable in the recent past, actually going all the way back here to July of 2021. This RSI level basically meant that you could, short Aave and go long Bitcoin. Going to the daily data points here. Let's look a bit. So we don't get any seasonality data. I mean, there's some interesting relationship here between Aave and Bitcoin. I give the bears a -3 here on the relative performance. It's just the bears, they do have a pretty good setup because the bulls haven't been able yet to really rally. And Bitcoin especially it's at a very vulnerable level. They really cannot lose this floor that we are literally at now today. It's dangerous, very, very much dangerous. And there's not really any kind of bullish news really for Bitcoin on the horizon. If anything, there's bearish potential news. The Security and Exchange Commissions, you have other, financial authorities that are starting to get a bit more aggressive against Bitcoin. This is a very troubling setup. So there's more reasons now to be bearish than bullish, unfortunately. But as I have shown, there are some bullish levels that could help this. But given that they haven't really played out so far, what are the bulls waiting for? That's the thing. When there is a bullish signal and the bulls don't act on it, it could very well be that we don't have a bunch of bulls sitting on the fence. So we have some time left, so let's look at Ethereum. That's a classic we just have to go to. Still, far above the 200-week moving average, so that's looking constructive. For Ethereum, the big level in play is definitively this blue 100-day moving average. It has been a support level, but definitively also very much so a resistance level. It is a declining moving average, and you also see here that the green 50-day and the purple 20-day are resistance levels, so messy, 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 messy. So let's look at Riot blockchain as an example. Yeah, I mean, you could argue maybe we have a horizontal support level, but I don't like that we lost the green 50-day moving average on Friday. Given the context of horizontal support, we would expect something like the 50-day to attract buyers, but we did close below. That's not good. What about Coinbase? Yeah, there is some kind of floor-ish pattern here. But the problem is that we have a bit of a floor, a bit of a rounding bottom here forming. But notwithstanding that, the green 50-day moving average has not been able to offer support. That suggests that we don't have that many bulls out there. Why aren't the bulls buying the 50-day? They are sort of supposed to buy support levels. That's an issue. Definitively an issue. Let's look at Goldman Sachs. Definitively more establishments. Yeah, I mean, Goldman Sachs, on the topic of losing support levels, the red, well, yeah, we see here that the blue here, 100-week moving average, it was support, now it is resistance. On the dailies here, the red 200 daily moving average, it was, support back here, as you can see, but now it is resistance. So yeah, Goldman is also a bit in trouble here. Yeah, let's look at Bank of America. The red 200-week moving average very close by. Maybe it will offer support. I mean, it's been a big deal in the past. On the daily data points, the green 50-day moving average. So this is an interesting setup for the bulls where we have support on the weeklies and the dailies, which means that bulls who look at the weeklies and the dailies, they see support. On the monthlies, you have the 50-month moving average in green. There are people who look at monthly data points, but far less than the weeklies and the dailies. Let's look a bit at gold. So gold, it's being lackluster. There's been a lot of expectation that gold would sort of rally a bit, but yeah, there is a horizontal support level around here. See support back here, and also back here, and also way back here. You also have the red 200-week moving average very close by. So how close is it? So if you were to use, the 200-week as a stop level, yeah, it's decent. I mean, I do think that gold looks very interesting at these levels. So here is, gold. You do have that double bottom. So let's look here at silver, SLV. Oh, silver, it's lost all moving averages, a bunch of support levels. You could make the case that there's a bunch of horizontal support now. But yeah, silver has been really weak. On the dailies here, it just looks bad. Below all the moving averages, horizontal support levels have failed. Maybe some RSI and PPO support. Yeah, let's look at the weeklies. Yeah, I mean, the bears have been very ferocious with silver, so I think that there's some reason to expect that maybe there's some bullish opportunities even here. Let's look at platinum. Platinum futures like that. Yeah, I mean, you could argue horizontal support. You could do that. Yeah. Let's look at palladium. Very few people trade palladium, but that can also be a bit of a beneficial thing. Yeah, the red 200-week moving average. So we fell asleep at the 200-week. Well, we are slightly below, but not dramatically so. Yeah. So also here on palladium, there's something interesting. Okay. Let's look a bit at the GDX. Yeah, just very bearish. The bullish levels that could have held, they didn't hold. Here again, you could argue horizontal support, but maybe even, yeah, looking at RSI, we are, and also the PPOs, we are at low levels that have a tendency to form major lows. Also on the dailies as well, we have something similar. So it's one of those situations where the bears have done so much damage that it makes sense to become a bit more contrarian and look for bullish opportunities. Now let's look at SL. No, it's SIL for the silver miners ETF. We are at some very low levels that historically have been very viable. You could make a strong case that just looking at this chart, there is value at the current level. Maybe even some time cycles. Let's see. Yeah, maybe. The time cycles have differed a bit in duration, but buying low and selling high, it does historically tend to work for silver miners. So definitively, when it comes to precious metals, I would have them on my radar.